How can you invest and make money in today's real estate market? Welcome to the Successful Investor Show, where we talk with successful real estate investors, business owners, and busy professionals on their journey to wealth. They share their best ways and advice to make massive gains in today's market. Make sure you are subscribed so you never miss an episode. Now, here is your host, Doron Nissim.
Welcome everyone to the Successful Investor Show, where we talk about how to passively invest and create passive income and generational wealth without doing all the work. I'm your host, Doron Nissim, and today I have the pleasure to welcome our guest, Max Shah. Max is the founder and creator of ROS Capital. He lives in Panama City, Florida. He's been investing in real estate for the past 14 years. Been investing in single-family properties, multifamily properties, hotels, motels, gas stations. Is a very experienced in developing new construction and single-family homes. He owns and operates 77 properties in Fort Wayne, Indiana. He has a degree in IT, specialized in asset management. Welcome to Max Shah. How you doing, brother?
God. I'm good. How about you, brother?
Good. Thank you so much for joining us. It's a pleasure to see you and meet with you over here. And we want to hear about your journey of real estate.
So thank you for inviting me. And yes, it's been quite a story, I guess. You summed it up pretty good. But just I have 58 doors in Indiana and total 77 doors.
Wow.
But yeah, so I started working in a hotel when I was in high school over here. Ever since I started working in a hotel, when I graduated from school, I went to universities and I worked through my life to the hotels as a manager because no brainer. You work at nighttime, do your homework, you get to stay for free, and all the bills are paid. So,
wow.
When I graduated, I went to Microsoft to work for a few years, and it wasn't for me. And my grandma was sick here in Florida, so I came back to Florida, and that's when I bought my first hotel.
Wow. How many doors was your first hotel that you bought?
68 rooms.
68 rooms that you bought and operated.
Yep.
Wow. How was that?
Struggle, really challenging because I was a manager and I know what was going in and out of hotel, but owning a hotel is a different story.
Yeah.
It's really different, especially when the property is not cash flowing.
Yeah. I imagine not cash flowing and doing all the operational. It's a big challenge.
Yep. So I was working 100 hours a week, and I'm still working 100 hours a week.
Wow, 100 hours a week working. You hear this, guys?
Yep.
It's amazing. That's how you do it. Wow, and you also own and operated a gas station where you worked full-time job. How was that?
So this is what's going on in gas station. I was working in a hotel first, and I sold the properties I bought, sold, stuff like that. But when I was buying a hotel in Texas, in Sulphur Springs, my local bank here offered me a gas station over here in Panama City area, nearby Panama.
Mm-hmm.
Now I worked for a gas station before, so I was like, okay, it must be challenging. But I love challenge because all the property I bought were closed down.
Right.
So he's like, the property is closed down, had 18 different owners in 20 years. See if you could do something, we can take it off our books. So I'm like, okay. Since it was a good relationship with the bank, I wasn't going to say no to them.
Of course.
The deal was solid.
That was a good opportunity. If a bank offer you an opportunity, you don't say no.
Nope. So
Wow.
I took over the property and ran it myself, open to close for like 20 hours a day for like almost a year and a half.
Wow.
It was a reason people left because it was a parking lot of Walmart, across from big truck stops. So you weren't selling much over there. And it was a horror story when I took over the store.
Wow.
I don't know why they left all then, but I stuck through it. And 2 years later, I'm cash flowing like I never did before.
Wow. So now you're cash flowing, the property is making money,
Mm-hmm.
and now you're ready to exit that property.
Nope. Best property I bought. I'm going to sell that one for a while.
Wow. Oh, so you're not going to exit.
Nope.
You're gonna
I
keep
bought
it.
a few. I bought one more from the bank that they had, and I sold that one this year actually.
Wow.
But this one is I'm not gonna sell.
Very nice. So tell us, in this journey, it's almost 10 years that you've been investing. Did you have any like aha moments or something like, this is what I'm going to do? I love this.
Yes, that came in when I bought a gas station, to be honest with you. So it was like completely new experience for me. So when we bought the property, I was struggling, dragging my feet for like almost a year. I wasn't cash flowing, anything like that.
Mm-hmm.
But then I started improving the numbers and hiring people and stuff like that. And I was like, I'm starting making a lot of money from this place.
Right.
So let me reinvest my cash somewhere else, the other real estate, and I started buying homes and building. But
Yeah.
now in the same property, my cap rate is about almost pushing it 29%.
Wow, 29%. You hear that,
Mm-hmm.
guys? It's amazing. On a gas station, but it's a lot of work. It's not just
A lot of work.
It's not just
It's
investing passively.
Nope, you don't just buy it and forget about it. You buy it and run it.
Exactly. So I guess the next question is, what's your most successful deal, and what was the best one that you did?
I'm gonna go back to the station, I guess.
the gas station.
Yeah, it's the first one when we bought first one from the bank.
Mm-hmm.
That had 20 different owners, and anybody could never run it. I bought it for $650, and 2 years later, it just appraised at 2.9.
Wow! So you bought it at $650, and now it's worth about 2.89, 2.9.
Yep, exactly.
Amazing. So, what do you think? I mean, we're going into, everybody's talking about recession, things like that. What do you think? Well, what are the things that you do to mitigate the risk of losing money on deals? What do you do?
Buy more assets.
So buying more.
So this is what
tell us about
everybody. So everybody gets scared and they back out, and that's when you find a good deal.
Mm-hmm.
And if you see the history of recessions and inflations back in '70s, every single asset class declined except for the real estate. Real estate was going up by 2%, 3%.
Right.
So property value is not going to drop much. Only reason it's dropping right now is because after the COVID, property went up like 30%.
Right.
Crazy in span of a year and a half, which is abnormal completely.
Right.
So you're going to see some of the pullback from that peak, but overall, buy more properties.
Yeah, they're talking about 10 to 20% going down back.
Yep.
But
it's going to go down to 20% approximately on average.
Mm-hmm.
But then again, it's going to flat out. So if you find a right deal that is cash flowing, buy it. Don't wait for it.
Right. So yeah, the best way right now to mitigate the risk is actually buying the best opportunities and invest.
Also hold some cash too. So right now you're gonna wait to find a deal. If you find a deal, that's well and good. If you're not finding a deal, hold the cash.
Yeah.
You're gonna get the deal. Cash is the king right now.
Right.
You're gonna have a lot of deals coming up.
Yeah. Sit on the cash. If you find the right deal, buy it. If not, maybe invest with somebody. Can you tell us about what you guys doing in your property? How did you structure the deal in Indiana? Tell us about syndication. That was a syndication deal, right?
Yes, sir. It was syndication deal. I was networking with a group of people, and I know one of the guys from almost 10 years now.
Mm-hmm.
So he invited me like, hey, we got a deal in Indiana. Since you want to join the team, if you could raise capital and do some asset management and some work. So they have a solid deal that came to them, was brought to them by my other partner. And we did underwriting, and numbers were screaming deal. We were going to close in January, but we had to close earlier for our investors because of the depreciation.
Mm-hmm.
So we closed that property in 3 weeks.
Wow.
In busiest season of all in holiday times.
Wow. The busiest season, December.
Yep.
But
so we raised money and closed it.
Right. So syndication is that you partner with other investors as general partners, and also you have investors that they are called limited partners. What do the limited partners do in a syndication?
So all they do is they invest their money and wait for the returns.
Right.
They do some more stuff too, but usually they are busy professionals, so they don't have much time to do anything. That's the only reason they join our syndications or any syndications, because they want hands-free approach to their money.
Right.
They want to make money when they're sleeping, and that's what we provide them.
Okay.
So they invest their money, and we give them solid returns, 8% pref. Then we're looking at 2 times the equity in almost 3 years.
Wow. So without doing any kind of work, they're going to get the returns and the equity on the property.
Yep.
Wow.
So they're going to multiply their equity by. So for instance, one of my investors has invested $100,000 in a deal. Mm-hmm. He's going to have 8% pref return every year. Mm-hmm. By the end of 3 years, when we dispose the property after renovations and stuff like that, the returns from the sale sell proceeds is going to be way higher to cover their investments plus times one more. So he's going to net $200,000 from the 100,000 investment in 3 years.
Wow. So it's about double the investment.
Yep.
Amazing.
That's a solid screaming deal. If I had to choose the best deals, this would be the second best I had in my lifetime.
Amazing. Yeah, multifamily is a really good asset class to invest.
Multifamily is the way to go.
Right. All right, so we're going to move to the final round of 4 questions that you're going to give us your input. The first question is, what's your 3 best success habits for being successful?
So never give up. Consistency is a key as well as putting the effort and work. It's not an easy game. You wake up on it. You have fixed schedule. You wake up on your time. It's all about family, praying, helping people out too. So you wake up on your time. You do your work. You grind yourself to the success, basically.
Wow, nice. Exactly. You said it right. So is there a success book that you read and you can recommend us?
Everybody knows the book, Rich Dad, Poor Dad. It's a pretty cool book. Right now I'm reading Morning Miracle Millionaires. This is also a solid book. And afterwards, I have the Slight Edge that I'm reading from Jeff Elson.
Nice. Those are great books. I also read them.
Yep.
What is there a resource that you use in your business that you can say that it's a good resource for our listeners, for our viewers?
Oh, that's a good question. A resource by
like
resource,
a
you mean?
like a website or a place or a newsletter or a magazine,
So
something like that.
So
that
if
you
you
use.
say so resource, I would say coaching too, since it's a good educational resource. Find a mentor who could train you. Join the room. Get into the network with people. By resource, I could also add use the tools to your advantage. Marketing tools, website development. You just put yourself out there. That's the only resource is yourself.
Right. So one of the best resources is to network with other investors, to be in the room and hear what everybody's doing and saying and be part of the game.
Yep, exactly. Who you hang out is what you're gonna become. So.
Right. That's great. The last question for this round is, do you have any 3 tips for people to make money today in real estate?
Yes. So this is what it is. In the U.S., we don't have financial education in schools. There's a reason for it too. But we don't want to go to politics on it. But so for best thing you could do to make money is save some money first at the beginning, live under your needs and beyond. And once you save enough money, invest into business or real estate or both. Then from the cash flow, you invest some more to the properties. Then you could expand or splurge a little bit.
All right. So those are 3 great advice. Save the money, invest it, and then reinvest what you make to make more money. Those are great advice. So for the last question of the day, for people that have full-time job but still want to invest in real estate and do it successfully, of course, what advice would you give them to do it?
So like I was saying, syndication. Let's go back to syndication on that one. All of my investors are busy professionals. They're doctors, lawyers, engineers. They don't have time to find a property. So invest with somebody or a team who has experience in syndication and look through their numbers. Deal's going to be solid if you're a solid team. I invest in people, and every single deal we do, we invest our own money too. So syndication is the best way to invest in passively. Then comes into other investments, like buy Airbnb, have a property manager do it, but that's still semi-passive. You're still active somewhere over there.
That's active, right? So passively invest. You mean doing it with partners, doing it with people that's going to actively operate the property and manage the property and find the property and do all the work, and you can enjoy the benefits of owning the real estate.
Yep.
Right. Can you tell us about what's the benefits, the tax benefits for business professional when they invest in real estate?
Depreciation.
Depreciation.
It's not just for the busy professional, I'm gonna put my example as well. The reason we invest in our own deals is because of tax depreciation too. We're going to save some money in taxes too. So last year, our bonus depreciation, which was passed on a COVID time by Trump, which is going to expire in the next 4 or 5 years, last year was 100%. Every single dollar I invested, I have 80% on depreciation year one. When we speak about depreciation, it's just a negative paper loss in your investment. It's not an actual loss, it's a paper loss, which on standard terms, it's 27 and a half years. IRS says you could depreciate any asset you have. There is some exclusion to it, but CPA is a good option for them. But so with the bonus depreciation, you could accelerate some of the depreciation faster than 27 years. So busy professionals can save a lot of money in taxes.
Very nice. So if they invest $100,000, they can depreciate $80,000 from their taxes.
It depends on deal by deal. That's what our last deal was. But this year is going to be a little bit less because every year is going to trickle down 20%. Wow. Equals to zero.
It's still
you still have depreciation, but it won't be bonus.
It's amazing depreciation on taxes, and people needs to know that.
Yes, sir.
All right. That's great. Thank you so much, Max. That was very informative, and I know our viewers going to enjoy everything that you shared with us, and they are much more educated right now. Anything else you wanted to share with us?
Yes. Like I was saying, save money, invest more money, get into the deals, talk to right people, hang out with right folks. It's all about mindset. Set your goals and go after them. If you fall back down, let's go back up and keep on moving.
Amazing advice. Thank you so much, Max.
Yes, sir. Thank you so much.
It was great having you, and I'll see you next time.
Thank you so much for listening to this episode of the Successful Investor Show. If you're enjoying this podcast, please feel free to rate, subscribe, and leave a review wherever you listen to your podcasts. That helps others find the show, and we greatly appreciate it. Once again, thank you for tuning in, and we hope you'll join us on the next episode of the Successful Investor Show.